Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, August the 25th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave one is done. Mr. Tucson, we're going to pop from here, or we're going to still fizzle and break down. Emil, it's too early to call. So, yep, Ian, that's a done deal. Stick a fork in it, dude. It's done. We're going up. Could, but this is not the most bullish price action, even though it's holding at the moment at that retracement zone. We'll go over in a second. The easiest way to think about this is if this is done, then we need to get above this pink box. We get above the pink box, then we'd say with a high degree of certainty that wave two is done. We get above the pink box. While we're below the pink box and we're considerably lower than that pink box, we still have pressure to go lower low. Then you throw in from the COVID low over here up to the high. We took that 618 zone out where we closed below it over here. So that's kind of giving insight that we might need to go lower low than this COVID low over here, which would be from that low up to that high, that 1448 extension, maybe the 1272, and that puts us right around 85 to 82 zone. So that would be right around this area. Are we going to do it? We could. Do we have to? No. So it's possible this could hold and we do break out. But again, as long as we're below that pink box, the probability we have more pressure to go lower is still out there. And this is not the most bullish price action. If you just look at this over the last 4+ years ago, when we talked about this correction coming, that it would be a substantial correction. It would take multiple years to do it. Well, is this the end? Maybe, but notice how this price action, we had a nice drop. Then we started chopping and we're making higher highs, lower lows. And then we started shifting and making higher lows and higher highs. And we just kind of chopped, made one last pop. And even during this breakout, I was like, there's no way that's one. And this correction down here is two. And this is the beginning of a breakout because I wasn't complete. We did say that we had to go lower low to make this look better. Well, we got there, but notice this action as far as price action. And then we get the initial drop, chop sideways, pop to a higher high, and then we drop. So we kind of did the same thing. This drop here is kind of like that drop. Then once we drop, we chop, made a lower low, chop, made a few lower lows on this one. Then we popped, made a slight higher high, like we did here. So is this the beginning of this rollover to another lower low like we did on that one? Maybe. That's why we were talking about these very important levels. And then we looked at this thing to potentially go lower. Well, let's jump into the charting platform and go over specific levels that you need to be aware of. First off, from that prior low, this looked nice. We got a 618 retracement. We went to extension, but where we stopped is typical of not a 1, 2, 3, but of an A, B, C. And if the prior correction and the direction was down, and this is three-wave correction, then typically you would expect more downside. So that's one for the checkbox. Let's go the pros and cons. Pros would say, what's the likelihood we're going to go low or low? This is one of them. This initial price action going up in a three-wave correction, and where it stopped is indicative of an ABC. What does that mean? The amount of the A either equals the C or A times 1.272 equals the C. So when you do this three-wave or this 3.2 here, you take the low up to the higher low, you can see we stopped right at that parameter of an ABC type of move. Well, sometimes your 1, 2, 3s don't always go to where you'd expect it. Most likely they do, but sometimes it could be short. But then when the correction started, we overlapped. If that was 1 and this is 2 and that's 3, then this 4 is clearly overlapping, which suggests we need some more downside. So there's another check in the side of, hey, we're likely could go low or low. See, the next extension's down here, 94.93. We, on the bull side, of saying, well, no, because from this prior low up to the high, this initial high here, we hit a 618 retracement, we bounced. But if you look at that same zone from this low up to the current high, we still got the same support zone that's right there, right? So this is somewhat bullish in the sense that we haven't broken below the 618 level of the prior low up to the current high. So that's a check mark for maybe the bullish side. On the bearish side, from this recent low up here to the high, we did close below that 618 level. So when we talked about this prior weeks when we were compressing and compacting the channels, we said if we close below 99, we're likely going to make a move toward this 97 area down here. Well, look where we stopped currently, exactly at that 786 zone. So this is the tail end of holding on as a support zone. We close below this, we're definitely going to test here. Then the real test comes. Do we just come back down and test the support zone, the darker green box to break out? Or do we close below that? Then that really sets the negative tone of we're going lower low. So I've been saying during this compress and compact the channels weeks, we originally had this low, so we got that support zone down here. Then we have this new high up at 102. So you compress and compact those channels. Then you look at the 618 of this level, which is this green box. So we have that support zone. And then now this latest one is the lighter green box from the low to the high. Breaking the 618 still says we're more likely going to go down here. 75% likely we're going to visit 97. But we're still holding on by a thread right there at that 786 zone. But notice even this pop since then. That's not the most bullish price action right there, right? If this thing was going to find support and reverse, you would look for a little something more than what we're seeing. So is it possible it could hold here and start breaking out? I wouldn't take this rally seriously until you take the recent high to the low and you start breaking above the 618, which would be this all-important 150 area. Just looking at that high to that low, this is going to be the key area to get above. Why? Because I said so. No, because this same level goes back well over a year ago. As we started to break down, we tested, we came back, tested, then we went lower low, tested again, lower low, tested twice, lower low. We tested here, pull back, and we ultimately broke above, but now we're back below it. So if this is finding support, the only way to get excited about that support is we got to get above this green line. That is a major battle zone. And if you take it out to a higher time frame, we can see that green line goes back years, even decade plus, where it was resistance over here in 15, resistance and later in 15. Then as we broke, we found some support in the 17, 16, 17 range. Then we broke back down in later 17 and continued resistance, even on this way back up, big spike up. But look where the candle bodies closed, right at that level. So this is why that's an extremely important level as we're watching it. It goes back, we always like to say, the more times something has been resistance, turn support, resistance, turn support, resistance, turn support, as this is done, the stronger this battle zone is. So this is why that 150 area is going to be very important. And this kind of got pulled back just a little bit. 100.5, let me straighten that, 100.5, but you can see right at that 100.5 is a major battle zone, and we're below it. So that's another check in the box of the kind of bearishness that we're still below this all-important level, right? So what is the 618786 zone? It's going to be a part of that. It's amazing how price action does that. From that high to this low, look where your 618 is, right at it. It's Tucson, you can't make this stuff up. So in order for this to get kind of bullish, we got to get above that magic level. And really, we need to get above this lower high, which is right in the wheelhouse of that 786 zone, just a little bit higher. But if we get above this green line, that's starting to look a little bullish. We break that prior swing point, then game on, we're going to go to visit 102-ish, maybe 103. Well, remember, part of the compact and compress the channels is 102. We close above 102, we're likely going to make about a 3-point run to that 105 to 107 level. What is that 105 to 107 level? From last year's high, when everybody was short the dollar, anything but the dollar, go short the dollar. We move down. That would be a 618786 zone. 104.77, basically 105 and 107. That's why I say if we close above 102, the probability we go visit 104 to 105 to 107 is pretty high. So that's why this is a high probability move to the upside if we can close above 102. Well, if we start closing below 97, which is the bottom of this green box down here, we close below that, then the probability we go lower low is extremely high. So what we've been doing is calling compressing and compacting the channels. You get above 102, we're going to go to that bubble, highest probability. We get below this swing point low in this green box down here, the probability we go visit this bubble down lower is very high. So from 102 to 105, a good 3+ point run up, or we close below that 97 area, we're likely to get a 3+ point move lower toward that 94, 93, 92 area. Everybody see it? So which one's it going to be? Are we going to chop in here and break down, or are we going to break out? Well, force price to prove it. All I know is if it closes above 102, I'm going to go long. UUP, way to play that with a little leverage. Or we could do what? When we know the dollar's going to go ripping higher, we could sell the euro dollar, right? And sell the pound dollar, do some currency trades, take care of that same move. Or if we start breaking down and we're going to drop 3+ points down here, then we could go long that euro dollar trade, go long the pound dollar, etc. Any questions on that? So above 102, we're likely going to 105, 107. Below this prior swing point, that was that low A, B, C type of move. We break that low, then the probability we go in lower low is very high. Fair enough? So what's it going to be? Well, that's why we're doing the pros and the cons. And then you start zooming in on this latest price action. And I know you can't see much when I zoom out like that, but the main point is to see these critical battle zones and where they lie. So in order to get a lower low, we really need to take out 97. And I'd like to take out that swing point because we came down here and bounced. Then we came down here and bounced, kind of a double bottom area, and went up. So if we're able to close below, and that's why I'm just kind of giving a little extra room, like that 97, just below that level, the probability we go lower low is very high. At the moment, the likelihood we go test, doesn't mean we're going to close below it, but the likelihood we go test this 97 area in this prior low is high because from the prior low there up to the high, we took out that 618 zone, that 99 area on that big red candle. So this is likely still going to go test 97 down here in this prior low. Could we come down here, find support, and bounce and go up? Yeah, we call it like a triple test. Go up, test it, bounce, test it, made another high, but we test it one more time, and we still go breaking out. I don't care what price does. We close above 102, I'm going to go long and expect this to go visit that 105 to 107 level. If we break below this swing point and close below, not just like a wick down here, but a candle body close below this level, then the probability we go on and visit 94, 93, 92 down here is very high. And what are the 94, 93, 92? It's extensions. You notice we always use Fibonacci retracements and extensions along with the MPA PE5 software. So big picture, this is what we always start with. Are we going to get the deeper retracement 4+ years ago when we talked about this correction? This was kind of the zone I wanted to see. Well, down here in early 2000, roughly May-ish of 2007, when this thing started bottoming, actually 2008, I believe this is, between 7 and 9, right up in that area, when we started closing in here and we rallied up, this was part of the destination where we were going to go. You remember many years back, we talked about, well, the dollar is headed to 115, 120. We got to 114.72. Not too shabby, 115, 114.72, when we were, dozens of points away from that. That was a pretty good deal. We got the correction, and we were looking for a 618, which was roughly around 87, to a 786, was roughly around 80. We were looking for a deeper retracement. And remember what was stated 4 years ago, we said that we're expecting a very time-consuming multi-year correction where we're likely going to come visiting somewhere around this 618. Well, notice from the COVID low, we already tested and broke below the 618, and we're right at the low there was right at a 786 of that retracement. So is it going to be we got the 618, 786 retracement before we go breaking out off of the low back here in 2007? Or is it going to be the low off of this COVID low and we test the 618, 786, and then we go breaking out? It'll be kind of ironic, if you will, that Emil, we knew we were going to get a 618, 786, and if we don't go down in here and it ends up being this one here, it's still a 618, 786 retracement, right? So high level again is below the pink box. We have more pressure to go lower. Above the pink box pretty much says this is over and we're ready to go breaking out. Well, I'm very confident once we get above this pink box, we will go breaking out, but I think it's going to be a multi-year stair-stepping affair. Like this took multiple years to correct. And once we could stick a fork in that saying it's done, I still think even when we get above this resistance zone, it's probably going to be a multi-year type of climb toward our target zone. What is the target zone, you ask? The target zone on the big picture is way up here in the stratosphere, and that is right reaching for the prior 120 to 140, sweet spot of about 130. So I kind of put a bubble up here, 130 to 140 zone is where I think we're going. what is the likelihood we go visit that zone? In my humble opinion, I'm about 1,000% confident on a 100% scale we're eventually going to go visit that. The question is, do we need to make a lower low first before we get up there? Do we break out now and get up there? Or do we get the much deeper retracement we originally talked about, going to somewhere around that 87 to 80 zone, this light pink, green box here, and then we go up here? Well, all roads lead to this target up here. The question is, do we still need to go lower low first, or do we get the bigger retracement in here? And the reason I'm hanging on to this still until while we're below this big pink box up here, right? What do we see on the other picture? As long as we're below this big pink box, the probability is we still could go lower low. Once we're above the pink box, the probability we're going up to this target is extremely high. And this could take, a year or two or three, but start stair-stepping its way. So far, so good. And we're below the pink box, so we do have more pressure to go down. But if you do look at the COVID low up to the high, where did that 85, 82 zone I referenced a moment ago come from? That is the extension from that low to that high. The rule is you close below a 618 level, not a wick, but a body. You have a 75% chance you're going to go visit that 1448. You have a 70% chance you're going to go visit the 82. That's right in the neighborhood of our original low back in 2007. So I'll see if I can drag this over here to show it right in here. And it was March of 08 to be exact on this one. March, April, right there. February, March, April. Got all that right in that zone. So are we going to get the 618, 87, 786, 80? That's this box. Are we going to end up getting here, which would make sense that we, based on the close of that COVID low up to the high, that close of that 618, that 9880 zone, when we close below it, giving us a 75% chance we're going to visit. So I'm not going to say I guarantee we're going down here, but we certainly could. When is this off the table? When we get above the pink box. We get above the pink box here, we're going up there, 130 area. Got it? So in the interim, we've been compressing and compacting the channels. But isn't it kind of funny here from the low up to the current high, the original zone we were looking for, 618, 786 type of retracement, we haven't reached yet. But off of the recent low here, that COVID low up to the high, we have. So this is why it's possible we could go breaking out here, but we still have a very high probability we need to go lower low before we can find the support we need to go higher high. So far, so good. So zoom in, go back to the daily, compress and compact the channels. And just as a quick review from the recent low, that's a three-wave move. And it looks like an ABC, which ABC, and we're in a prior downtrend. How do we know we're in a downtrend? Because we were in a downtrend, right? We were lower and lower and lower and lower and lower and lower. Lower highs, lower lows, lower highs, lower lows. So just because we got this little three-wave correction, that's not enough to say we're going breaking out. Even though I just told you I'm about 1,000% confident on a 100% scale, we're eventually going to go visit that 130 up here. We got to get above this pink box to do it. And that would be high probability at that point. But in the interim, could we still go lower low? You betcha. Absolutely, we could go lower low. And the most recent low to high, closing below that 618, kind of gives the same vibe. We have a 75% chance we're going to go visit 97, and that's where that swing point low is. In general, you make notes of this. In general, if you have an ABC type of move and you close below, in this case of an ABC up move, you close below the B wave, bottom, the A, the B, you're likely going lower low. It just so happens that same zone is from the recent low up to the high, that 618 right around that 97 and change. So we break the lower low here. We're closing below this 618, which then says what? 75% chance we go and visit 94, 93, 92 area. See it? So now you know when I keep saying, Emil and others, Alan, that we close below this swing point, we're likely going 3 points lower and visit that 94, 93, 92 area. And if we get above the 102, short squeeze should probably kick in. Short from what? This last year's anything but the dollar. A lot of money was shorting the dollar. Everybody was shorting the dollar. So, three-wave correction, proportions suggest we're likely going lower low. If this is the 1, 2, 1, 2, then if we get below that swing point, that throws off the 1, 2, 1, 2 scenario potential breakout. So I can't say I guarantee we're definitely going lower low, but what I can say, as we already closed below that prior 618 level, from that low to that high, we closed below that 99 area. That suggests we're going to go test this low. So be careful on this low bounce here. I don't think this is ready to go breaking out. I think it's going to fizzle and go test this green box. Once we get here, it's very important. We close below that swing point, then the likelihood is we're going lower low. So zoom this up, stretch this out so we can see this price action a little bit more easily. And Mr. Tucson, we still compress and compact the channel. So that's why I started this conversation. More likely going lower low, but if we get above 102, we're going to go long. 104, say 105, 107. We close below that 97 level right there. Then we're likely going lower low, which brings us into that 94, 93, 92 zone. Fair enough? All right. In the interim, the bias says we're likely going to test the support zone. And most recently, we're holding on by a thread of that low up to the high. There's your 786 level. And we touched it. We are bouncing. But this is not very bullish price action right now. So we went on to say that, Emil, in order to take this bounce seriously, we got to get above this green line. That major battle zone goes back decade plus. It was former support, turn resistance, turn support, turn resistance, turn support, and then most recently back to resistance. And this has been going on for a year that we've just been struggling in this area. So in order for this bounce to hold and take it seriously, we got to get above that level. And notice from the recent high to low, where is that 618 level? Right at it. Let me get the exact number right there. And we get the exact low. You use your control key. And let's see which one's lower. 98.56. This is the lower low right there. And look where that 618 is. Right at it. That green line. So if this is going to start to turn bullish, which it could, we got to get above that. And what if we start closing above that 160 area? 100.5, 160, right there, see it? What happens if we do that? Then we got the 102, 102.68 level. And why is this 102.27, 102.68 important? Because like I've been saying for a while now, we close above 102, short squeeze is going to say we're going to go up toward 105, 107. All right? And if we close below this, which we already did, the 618, we're likely come and test this zone down here. But if we close below that 97 area, then we're likely going to 94, 93, 92. So in closing, I know you're probably tired of hearing it. Are we going to go bubble hunting up top, or we're going to go bubble hunting down low? And these are target bubbles. Which one's going to play out? This one is more likely, but we have our levels to watch. We close below that swing point, that 97, game over, we're likely going down to this bubble. We close above 102, game over, we're likely going bubble hunting up top. And in the interim, we could just chop sideways in here. We don't have to break down. We don't have to break out. Eventually, it's going to happen, but we don't have to right now. We can continue this just chopping and grinding. But as we went through the pros and the cons of all this prior move from the low, 3-wave move, that's why if we close below this, it kind of neutralizes a lot of possibilities of going higher. What would that be? Well, this is 1, 2, and this is a 1, 2. We can't go below this 2, and that would throw that out. We still think we're going lower low because the measurements of this ABC move stopped where it should for an ABC correction, not a 1, 2 type of move. And if you say, well, Gary, this is still the 1, 2, 3, then this overlap kind of says the same thing. Overlapping says we're likely going lower low. So please be careful on any rallies in the short term. The only way I take heed to a rally and a close is we get above this 150, 160 area, and we close above that, then we're likely going visit this 102 level. But I'm most interested in is a close above 102 sets the tone. We're going to 105, 107. And I'm most interested in a close below that 97 area over here sets the tone. We're going 3 points down to that 94, 93, 92 zone. Got it? So there's your high probabilities above 102 and below 97. In the interim, we're chopping, but I do take and consider price action, of course. God-given talent to read and interpret price on a chart. And this is suggesting we want to go lower low. The most recent low to high, we close below that 618 level. See right there, 99 and change. That big red candle body, that's not just a wick, but a candle body, suggests we're going to visit that 97, 96. And by doing so, we're going to break that swing point, which tips the scale. We're going 94, 93, 92 zone. So this is why I'm still more bearish than bullish at the moment. When does that change? Get above this prior battle zone, which would break the 618 to the upside, and then we would have a 75% chance we go and visit that 102 zone. Is it possible we could do that spike up here intraday and then close back below and still fail and go lower low? Absolutely. I'll give you one better. We could hit the short squeeze, go up here to that 105 level, 107 level, and still go lower low. What would that look like? Well, you go out on a higher time frame, and it would simply be from this last year's high of 110 area down to the low. We just get a 618, 786 type of retracement. And we know from experience what happens if you get that, it fails, you start to break back down, you're likely going lower low. So even with that, this is not an all clear sign because we get up into this pink box up here. We have to get above the pink box to set the tone it's over. Got it? So that's the plan. We get above 102, we're going to look for it to go visit this bubble. We get below the swing point 97 area, we're going down here, that 94, 93, 92 area. Could we possibly get down here, then go breaking out? Sure. Could we continue this further and go toward that 87, 80 zone and then go breaking out? Yes. All roads lead to us going up to that 130 target up there, and it's probably multiple years out. Even once we get beyond this pink box up here, which then says, like I've been saying, easy math here, we get above the pink box, the likelihood we're going breaking out is very high. It'll probably stair step its way up there multiple year. I don't think it's going to break up above here and then in a day or two or a week or a month, we're going to be up at that 130 target. No, I think it would possibly take a year or so to get up there. Below the box, more pressure to go lower. Above the box, stick a fork in my humble opinion. We're on our way to 130. There you have it. All righty. Well, why did we look at dollar index and want to know every twist and turn of the dollar index? You know where the dollar index is headed and the high probability outcomes? You know where a lot of asset classes are going, including but not limited to euro dollar, pound dollar, among other currencies. But just like we've been saying for weeks, as the dollar was going to break down, the euro would start popping. We're testing this resistance zone, just like the dollar just was testing the support zone. And if the dollar breaks down and it breaks below that swing point, we talked about that 97, what is this guy going to do? This is a similar type of move that the euro dollar has made. And let's go to the daily and we'll zoom in on it and I can show you. We talked about being an ABC correction on the dollar to the upside. Well, here's your ABC correction on the euro dollar to the downside. The prior trend on this was up, and this looks corrective. So we talked about buying down here, that we were likely going to test it, and the dollar starts breaking below that 100.5. We're likely going to go visit what? The magic fibbo. So we said the other day, when we do that and we go visit the magic fibbo, the euro would visit the magic fibbo to the upside. As the magic fibbo broke on the dollar, it would go up to the resistance zone, or in this case, the support zone for the dollar, resistance for this zone. And we're right at it. Mr. Tucson, look at it. From the recent low up to the high, we closed above that 618, just like we closed below the 618 on the dollar, suggesting we were going higher high. Well, here's the same compressed and compacted channel. This is the same area as the $97 zone. So if we were to close below that 97 zone on the dollar, we would go where? Down on the dollar, 94, 93, 92 zone, the bubble. Well, if we close above this 1850 right there, 1.1850 area, then we're likely going to visit the bubble to the upside on the euro dollar, and that's going to be my 121, 122, 125 area. Huh? What are you saying to me? So I'm going to go over here. I'm going to put the dollar here so I have them side by side. If we close below and we break the swing point, where are we going? We've been talking about that bubble hunt, 94, 93, 92, the extensions, right? You can see the 1618 just a little bit lower. So, Mr. Tucson, if we close below that 97 area, which is below this ABC, that low, we're likely going to visit the bubble, 94, 93, 92 zone. Well, what is the euro going to do in that exact play out, right? If we get that, we're going down here. Then the euro is going to do the inverse relationship. We're going to break above this 118.50, and we're going to go hunting 121, 122, 125. What if the dollar breaks down and heads toward its 1618, toward that 92 area? Then the dollar, based on that drop, this euro dollar is going to run up toward that 125 area. Still hundreds. Right now at 116, we're just under 1,000 pips if we push it that far. But we've been talking about this bounce, and we're up hundreds of pips in a position of authority. And the likelihood we go breaking higher is greater at the moment. Just like the dollar is greater, we're going to go shorter from the recent low to the high. We close below that 99 with that big red candle, suggesting we're going lower low and test this swing point. So the euro inverse relationship, we just closed above the 618 from the recent high to low. We closed above the 618, suggesting we're going to visit this 118.50 and a little bit higher. So this is why any rallies on the dollar should be sold and any dips on the euro should be bought, because this is a high probability trade right now. 75% chance we're going to visit 119.20, 119.80 when we're already talked about it when we're down here 300 plus pips ago. And that would give us another 200 to 300 pips to look forward to. What happens if we close above 118, which would include these targets, right? Then we're likely going another few hundred pips. We're 121, 122, 125. Was another reason we're bullish on this euro. Go back on a higher time frame and the recent high, and I say recent, back in 21 to the COVID low of 22 down here, not COVID low, but 22 bottom. We broke the 618. So this is the bottom 4 years ago where I made a bold statement. You don't hear me say, I predict that this is going to happen. Everybody and their brother predicts. The weatherman, every Tom, Dick, and Harry out there that's talking about their charts or whatever, my prediction. Have you seen my prediction? Well, I leave that to the prophets. I'm not a prophet. I can anticipate with the best of them. So that's why we have our software, the Market Price Anticipator software. It anticipates the markets in time, on time, all the time. When you learn how to use it, you use magic fibos and you use a lot of other tools in the toolbox, but the software is a big contributor and component. So Mr. Tucson, the software said we were likely going to start bouncing. We got it. We got our pullback. Great. Everything was fancy, perfect. And most recently, we got that reversal expecting this. So now with this close, the technical picture says we need to go higher high. The technical picture says we close above 118.50. We're likely going to go visit this 121, 122, 125 bubble up here. That's what it says. And right now, we got exactly what we needed. And we're up in a position and we're just going to hold tight. So any dips on this should be bought as we continue to grind toward this bubble. Do we get up even higher? Well, the reason I even brought this up from the recent high to low, we closed above the 618, this 112.80 zone back in 25, April of 25, which says we got a 75% chance we go into 127.45 and about a 70% chance we basically go to 131. Well, that's already on the chart, right? We did it there. Then later we closed above the 786. That reconfirmed we're going to go up here. So this is why I'm taking this continuation grinding higher. And again, this could take another year. There's no rule to say this thing has to go breaking out to get up here by today, tomorrow, next week, next month, or early next year. It could drag it on. I did say 4 years ago when you might want to consider going long, it would go up thousands of pips over the next multiple years. We've done it, and I still don't think it's finished based on the technical picture. And the most recent bounce in technical picture suggests we're going to go higher high here en route to the ones we already have. So what are we saying? Like I said, April right there, that candle body close above that 618 said we got a 75% chance we're going to 127, 70% we're going to basically 131. Later, we closed above the 786 zone, that 117.50 area. We closed above that for many weeks, not only candle bodies, but multiple candles. That reconfirmed we're going up there. So this is why I'm taking this target up here seriously. In the short term, we just talked about, well, let's get to this resistance zone, close above that. Now my shorter term target's at 119.20, 119.80, maybe up to that 121 zone. That's on the shorter scale. But this bigger picture suggests we're going to visit 127, 130 area up here. So if that's the case, we get some big dips along the way we buy, we get to our targets, and eventually we're likely going to get up here. All roads lead to us going higher at the moment, but when is this off the table and we no longer look for this? If price breaks down and we're below the green box, then we're going lower low. Just like I said on this bigger picture over here, once we get above the pink box on the dollar index, the likelihood we're going breaking out is much higher. And we could say that this would be stick a fork in it, it's done. once we're above the pink box. Well, that's the same thing on this chart with the green box. We get below this area, then stick a fork in the euro, we're going lower low. Well, I'll do you one better. I already know the euro is going to go. I'm 1,000% confident on a 100% scale. The euro is headed down to this 0.8, 0.7 zone. Why? Because I said so. No, because we've been in this downtrend. This is a bigger correction, which I don't think is quite finished yet. But then a trend continuation is the next zone. And if you get the low up to the high, you start looking for those extensions. Look where they line up. 0.8, 0.7, down in that zone. So, Emil, I definitely think we're headed here. The question is, do we have to go higher first before we get there? Or do we fizzle out and break down? This is the key. Above this green, we should go higher. Below the green, we're definitely going lower, right? And we know what the targets are. So what's unique about our service is we not only give you a primary direction, but we give you an alternative. What if we go breaking and we go breaking out? You know what the targets are. What if we go breaking down? You know what the targets are. Where's the main level to watch? The major support zone. So you compress and compact channels and go, that's the big picture. What's the small picture? Small picture is we've already closed above that 618, so the probability we keep grinding, stair-stepping our way toward this 119, 119.80 area is 75%, 70%. I like those odds. That doesn't say I guarantee it's going here. It says we got a 70% or 75 here, 70% there, and those odds are good. Only a 25% we're going to go breaking down and not get there. So is it foolproof? No. Is it high probability? You betcha. And that's what the MPA PE5 version 5.0 software does. It gives you low risk, high reward, high probability trades combined with technical pictures, giving you the same targets. So in closing, in my humble opinion, keep buying the dips and shoot for this 119, 119.80 area. And then the bigger technical picture, we close above this 1850 area, which obviously those would be. Then we're likely going to 121.80, 122.80, and might get a little feisty up toward that 125. And all of those targets I just mentioned are still below the one we've already seen. Still outstanding is from this recent high to low, that 127, 130 target. All I can say is, what if we and Bruce, we get up here? I'm going to look to short this thing. Big time. Big time. Because we're targeting from 130 area, or at least 127-ish. And we're going to 0.8. That is thousands of pips. And no, I don't expect once we're up here to get down here in a matter of a day, a week, a month, or a year. Just like this correction has been multi-year up, once we finish it and we start reversing back to the trend to the downside, it's going to be a multi-year type of move down. Pound dollar's in the same boat. We have the same scenario. 4 years ago when this reversed, 4 years ago when I told you the dollar index was going to give us a big retracement, I said 4 years ago you might consider the euro dollar and buying the pound dollar, that they would take multiple years to make a retracement, and it would be thousands of pips. Spot on, and we still have thousands of pips to go, potentially, right? From 136 to 147 is over 1,000 more pips. I like it. So, Mr. Tucson, why are we very bullish on this one still? Well, from the recent low to high, we took the 618 out early on this one. It wasn't until 2025 for the euro, but the pound did it in 23. Then later we closed above the 786 over here, which were well above that 786. See, 786, 133.70 area. We're about 300 pips, almost 300 pips above that now. So we're reconfirming we're likely going here. 75% chance 147, 70% 152. Are we likely to get up here? Well, that's pretty good odds. So any dip should be bought on the pound as we look for the next breakout. Well, compress and compact the channels further, and we'll zoom this in. So the most recent move from the recent low to the high, we closed above the 618. Huh. Why is that important? Well, I still want to see the pound. Notice how we had this spike up here. We're kind of in that same zone. We hadn't officially closed above this yet. But this is from the rule is from the high to the low, you close above the 618, you have a 75% chance you're going to go visit the 1448. That's that 139. Well, that is 350 pips from now. That's not bad. 350 from this several hundred pip move already. So any dip should be bought, in my humble opinion, and this is my shorter term target, 139, 140. Maybe we get a little spicy up toward that 143. But the longer term target is off of that recent low to high we just showed you a moment ago, and that would be your 147, 152. Once we get up here, if we can get up there, which is still a high percentage, but once we get up there, the probability is we're going to sell the daylights out of this thing because the pound is also going to give us a lower low. And below that 103 over here, we're targeting that 0.9, just below parity, and maybe push toward that 0.8 zone. So 0.9, 0.8 for the pound. That would be from this, if we can get up there, 147, 150, that is 4,700 pips to get back to parity. And then it's another 1,000 or two to get down to this target. That's a lot of pips. Amen? All righty. So any questions? While we're above the green box, the probability we fulfill this is very high. Below the green box, the probability we go on here is extremely high. So the only way I stop shooting for the stars up here is we get below the green box and we shoot for the lower lows. What is this equivalent to? That's the pink box on the dollar index. And we get above the pink box, where are we going? That 130 target. We get below the green box, where are we going? This 0.9, 0.8 zone. That's the equivalence. Okay? All righty. What about the euro yen, pound yen? Be careful on the yen-based pairs. We get to a position of authority. It's grinding. It's testing. The Bank of Japan interceded here because the yen is extremely weak. We're testing this zone, but if we can't muster the breakout, we really need to go lower low. And all this sideways chop still suggests we're likely going to go lower low. Remember when I said that a few weeks back? We got what we needed, sure. That was like 1,000-point move in a day. That was a big move, right? Big move. And now we're grinding higher. We're in the zone that we could fail and still go lower low. So be careful. What if we break above and close above this where we're testing? Then we could shoot for a couple of 100 points up here. But I'm really not looking to go long for an extended period on these because the software, monthly, weekly, daily, everybody is at extreme levels. Everybody is at extreme levels. Amen? I think I have it in here. Extreme levels. There's the pound yen. The daily's kind of grinding into overbought territory. We have the monthly that is overbought. See it? Monthly's overbought, overbought, overbought. We have a weekly that started to turn down, and it's turning back up at the moment. So could this thing go breaking out? Yeah, but that's why I'm only looking, if we close above Harold, maybe that few hundred pips up there, but then we're going to be back where we were. Monthly overbought, weekly overbought, and daily overbought. Danger zone is abundance. So be careful with this. I would not be going long right now. I got to see it prove itself. And ideally, we're going to get a pullback coming as the daily starts turning over. Got it? So that and the euro yen is in the same boat. Here's the euro yen. Daily's in overbought territory. We're at a resistance zone. We got a weekly that's overbought, starting to push just slightly back up, but it's been engaging and disengaging, and a monthly that's overbought, turning over. So this is why I'm telling you, cautionary is the word, because monthly overbought, weekly getting back toward overbought, daily back in overbought. Not the ideal time to be going long on that type of move right now. It did bounce. We got 1,000 pip move lower, and it bounced. I was showing you, but it's bouncing into resistance when my daily is getting overbought territory. That is not the ideal time for us to go, oh, let's take a long now. If you took this bounce, it's time you be taking profits. Big time taking profits right now of this bounce. Would not be surprised to see this thing go lower low. Got it? But Harry, remember we're talking about this. Man, we need a lower low. And we chop sideways, we chop sideways, we chop sideways. We got that lower high. And that's what I really said, look out. We got the lower low. Is that enough to continue? Still a lot of sideways chopping action. So it really looked better if we went lower low yet again. And the software is kind of setting monthly overbought, weekly overbought, daily overbought. So in closing, be careful. This would look better if we went lower low. We're testing a resistance zone. My daily's overbought. Not really interested in going long right now. I'm more interested, even if it pops up here, to short it back down with the monthly, weekly, and daily overbought. Pound is in the same boat, kind of testing the zone. We're in the zone where we should reverse. This was very impulsive down. This could be corrective and we still get another push, but we got the same problem. A lot of chopping and overlapping price action. What if we close above? Then we can go a few hundred points higher, but I'm not really interested in that because the monthly's overbought, weekly, daily, etc. Sure, as a scalper, you might want to consider it, but what if it happens and we get up here? I'm going to short it back down because we'd have right back to where we were for this big 1,000 pip move down. We'll be right back in that same boat. Monthly overbought, weekly overbought, daily overbought. Got it? All righty. Enough of that. Let's move on. What about the markets? I'm still not convinced we're ready to go breaking out just yet. We're struggling in the zone. And more importantly, we have some interesting releases this week. In that, let me update my calendar here for you. We have core PCE tomorrow with GDP, right? Personal income and outlays, that's core PCE. And then we got GDP. Then later, after the close tomorrow, we have NVIDIA earnings. And if NVIDIA earnings aren't stellar, rock star type of earnings, then that can really help the market sell off. And then later the week, we got the new chairman speaking at the Jackson Hole, Wyoming summit. And on the first day when they meet, nothing really happens. But as we get into Thursday and then Friday, where our chairman speaks, that could potentially start some volatility. So between PCE, GDP tomorrow, then NVIDIA earnings, this could either stem the markets to go higher or it could certainly get them to go lower. So this is why I want you to be as a coin toss. And if NVIDIA earnings are very lackluster per se, or just not absolute rock star type of earnings, the markets could sell off on it. So what's it going to be? I don't know. I don't have any insight to what the earnings are going to be, but if they're not just unbelievably great, the markets are going to sell off. And I'm leaning toward that way because of this technical picture. This is not clear just yet. And we did say the last few weeks here, this 3 days, last week or so, that we're expecting a correction to test the prior breakout. And that's basically what we've done. Is this going to hold or go breaking out? It could. Mr. Tucson, this could easily go ripping higher. Kind of pull this out, zoom that up, bring this back to bigger picture. Where can we go? 78.60, 78.80. Maybe we get a little feisty towards 79. But what's it going to take? It's going to take NVIDIA earnings to just rocket in order to get there. So what if PCE, GDP, and NVIDIA earnings all tomorrow just kind of, not so great? We're going down. So the same thing technically without earnings, without the new releases. We did say once we reach the extensions up here, you likely get a pullback toward where you broke out from. And you see that wick, we're just right at it of testing it. So could we go lower to test it? Yeah. We break below that prior high here, then we're going to test the 618 zone. We don't hold that, we're going lower low. Any questions on that? So please be careful. We get bad NVIDIA earnings, or just not, I wouldn't say bad. We don't need bad NVIDIA earnings for the market to sell off. We just need lack of rock star, just unbelievable earnings. The market could sell off. And then we got what? PCE, GDP, all tomorrow. So that would give us some headway into this. And if it just blows doors and punch junk euphoria, then this thing could go breaking out. What we'll be targeting? 78.60, 8,000 on ES. Got it? All righty. But in the technical picture, this prior move and this chop sideways, we did say once we got to the extension, look for a retracement. Usually the breakout, that doesn't hold. You go to the 618, the prior low to the high. That doesn't hold. Then you start extension hunting, which would put us back towards visiting our daily magic Fibbo down here and making a new swing point low. So what are those levels? The support zone from the prior low up to the high, that 75 area. We did say if we start closing below 75, we're likely going to go to 72 down here. So this is a high probability, Alan, Mr. Tucson, right there. We close below 75, then we have a 75% chance we go and visit 72. 70 plus, we're going to visit 71.90, basically the daily magic Fibbo. That's this big orange line. So what is the likelihood we're going to go down here? Very good. What is the likelihood we're going to go breaking out from the recent high to the low? We got to get above this resistance zone to warrant going breaking out. Could it happen on NVIDIA earnings tomorrow? Yeah. We're in the summer doldrums. What does that mean? The option action, how much activity in the markets right now is very low. We're at some record lows, lower 1 percentile of just the number of traders right now. The market volume is low. All I can say. So a lot of times you could have price drift higher on low volume or drift lower on low volume. And we're in the low volume scenario right now. So all we need is a slight little catalyst. Tremendous earnings. Did you see what NVIDIA earnings were? This thing could go popping up. Or NVIDIA earnings, that's nothing impressive. We go visiting down. So something's going to give here. And right now, this prior 75 zone is where we broke out from, or was resistance to break out from. So we start closing below 75, we're going down, right? So what did I say the other day? We close below this 76 right there, we're going to go visit 75. We close below 75 area, we're going lower low to visit that 72, 71. Any questions on that? So what do we have going for us? We have, this is the Nikkei we're going to go over in a moment, but we're short on that position of authority. And we have this guy, We're short on the S&P 500. We took our first profit. We're in a position of authority, looking for more downside. Notice where I put the next take profits. If we don't hold that support zone of 75, where are we going? 73, 72 area. So just right at the prior swing point, a little bit below. So this is a zone where we're expecting that to go visit. That's why it's sitting there in a position of authority. Plus, we had the same type of scenario on these higher time frames that we're overbought on the monthly. Kind of sound like a scratch record in a lot of this. We're overbought on a weekly, starting to turn back over. And we got our trigger lower that got us into this trade. And the daily started to depressurize as expected. So this is why I'm not convinced this is going to go breaking out. What's the worst thing that can happen? NVIDIA earnings blows doors. Tomorrow's PCE GDP is smoking hot. Then it caps the after the close tomorrow with just stratospheric results from NVIDIA earnings. Everything, they beat expectations inside and out. And if thing goes breaking out, then it'll pip us out for more profit. I like it either way. But this suggests we're likely going to go lower low just based on the monthly turning over, the weekly turning over, and a daily pushing lower. So far, so good. So am I guaranteeing we're going to break down? No, but we're in a position of authority and it doesn't matter. We close below this 76, then we're going to go visit 75. That's 100 points. I know a lot of people trade E-minis that they get a point or two. It's like die and go to heaven with a point or two. Not bad. Well, we're talking 100 points. How about that? How many times can you get a point or two? 50 times? Get your point or two? Get your 2 points 50 times for that 100-point move? So watch close below 76. We should go visit 75. We don't hold the 75 area. We're going to go visit the magic fibbo, which is where my take profit 2 and 3 targets are. See it? All righty, there you go. What about NASDAQ? NASDAQ even looks less bullish. What do I mean by that? ES made a higher low and a higher high during that corrective action, and it went to the extension. Now we're pulling back, but NASDAQ did not. It went to the zone where I warned you, be careful that this could turn over. Monthly's overbought, weekly's overbought, daily's overbought. So we kind of expected this push lower. Now, this is still somewhat bullish from the recent low to the high. We haven't taken out that 28.3 area, which is the 618 zone. This green box is support zone. But the recent move to this suggests lower low would be a lot better. This does not look complete. So I've been saying it for weeks now. Sell the rallies. We expect the markets to continue to stair step lower. I'm still in that thought process, warning you tomorrow could switch. If NVIDIA blows out, just stratospheric type, this could give a bid to this to go breaking out. And maybe it can do what the ES has already done to go toward that 1448, 1272 target. So we get above this, we'll go up here. Likelihood we need lower low still stands. Amen? Any questions? So we get below the magic fibbo on the NASDAQ, we're going lower low. And what does that target look like? It looks like potentially first stop would be the 3-day right around that 24,000 zone. Another big support zone in that area. And then if that doesn't hold, we even go further toward this 22 zone. So this is the 3-day magic fibbo here. This is obviously the weekly magic fibbo. And truly be honest, we had this initial move. So let's go back a few months and remember what I said then. Back over here during that October high right there, October, December. Let me go to a daily, 3-day. I don't think I need to be quite that far. But that October, I guess it was December. No, this October. July. No, where was it? December. Okay. December high, we talked about this scenario that we were likely going to make. I think it's even further out. That's why I'm looking. There we go. I know I'm right. October. Yep. October. Right there. October. Anyway, when it topped out in October over here, and we got this pullback and we started grinding, we talked about we needed some sort of pullback. We got it. Then we went breaking out. Then this high over here in July, we topped out and we had this kind of anemic price action overlapping. And then we grinded and we grinded and we kind of said the same thing. Guess what, ladies and gentlemen? We really need a lower low before we can go breaking out again. That brought us into April of this year. That was back to truck up zone, right, Mr. Tucson and others? Emil? That was back to truck up zone. What are we looking for? Man, if we can get this weekly Magic Fibbo visit coming in toward the end of the year, we look for that Santa Claus rally, potentially do stratospheric type of bounce, setting up massive potential move. But the deeper we retrace, the more we can recharge the batteries for that blow off top going into next year. So in closing on the NASDAQ, this price action is very suspect to go lower low. It would look better if it went lower low, right? All of this chopping, still got the lower high scenario. This is not extremely bullish right now. And when you see this type of move, this looks more impulsive down, not really a beautiful three-wave correction. So this is more likely the initial move is the A. This move up is the B. And we still need the C coming back down. And if we get a little aggressive, then that's your weekly Magic Fibbo down here, your 3-day Magic Fibbo. We start closing below the low. What are we targeting? This 26,000, 25,000, a little spicy down to 24. That's right in the neighborhood of this 3-day Magic Fibbo. That doesn't hold, we go visit the weekly. All I can say is, what if we and Bruce, we get down here, make a new swing point low? You talk about in April, we were salivate country to go long. Well, this could be massive salivate for this thing to go stratospheric. And why do we like it? From the Liberation Day low up to the high, your 618 retracement right in that zone is where this Magic Fibbo is. And if we get that type of retracement combo meal, it's a 618 / Magic Fibbo bounce combo, that sets the potential to go up near 40,000. Whoa, dude. So if we can get this bigger correction, we have the potential to go stratospheric. Am I guaranteeing we're going to get up here? No, but it certainly is viable if we can get that bigger pullback and we start breaking out like we suspect that would happen. And that's still the plan. I will go on record as saying I don't think this is the end before the market crash, that we're not going to go all-time highs again. I do think we're going to get all-time highs, certainly. Then we're going to get a bigger correction. Will it be the market crash, AI bubble burst, commercial real estate, 5 trillion and counting? We're 40 trillion and counting in debt, all kind of cracks in the foundation, lots of problems. Could we get it sooner than later? Yes, but no later than later. So it's coming. I digress with that, so I don't want to freak you out. But in closing, where we're going, Mr. Tucson, the likelihood we go lower low is still greater. The monthly's turning over, the weekly's turning over, and the daily's pushing lower. That doesn't bode well for breakout. But just because the software says it, the technical picture is kind of saying it, the probability is still lower low. But could it go breaking out? Yes. NVIDIA earnings could do it. That could shake this thing up to go a popping. It can also give us a head fake pop back into this resistance zone and then fizzle and then sell off after the fact. NVIDIA pops on earnings and then the next day it sells off. So be careful. Again, this picture looks better lower low. What's the deciding vote? Nikkei. Nikkei I use is global liquidity. This looks very impulsive. This still looks corrective, and we really would like to see a lower low on this. Same reasons. Where's the big run up? Where's a three-wave correction in that? Typically, the market's an impulsive move, 5 waves up, 3-wave correction, 5 waves up, 3-wave correction. And you can see this one was more 3-wave-ish, like a 5 down, 3-wave up, 5 down. So 5, 3, 5. That is an ABC. This one, I can't see it. I just see 1, 2, then a subdivide 1, 2, 3, 4, 5, 3, 4, 5. So that still looks impulsive. That's in my humble opinion. Is it possible for this thing to go breaking out? Yes. What's the probability it goes breaking out? Lower. What's the probability it goes breaking down? Higher. And then from the high to the low, what did we do? We did a 618 retracement and failed. Well, do you have anything bullish for us on the Nikkei right now? Well, not really. That was this guy over here. And we sold the Nikkei. We talked about it. We're in a position of authority. What if it goes breaking out? It'll pip us out for profit. What if it goes breaking lower low? We're going to make more profit to the downside. And the weekly is the reason for the culprit here. The weekly is turning over. And I warned you, remember we saw paint the Picasso, Emil, the other day, when this baby started slingshotting up. And what do we know about our slingshot phenomenon? It's the most beautiful phenomenon in trading history, slingshot. Well, when this starts to disengage, red starts turning down, blue starts turning down, green starts turning down, we call that engage, disengage. Well, the probability when this disengages from this initial move down, it engaged up, and then it's starting to disengage, the likelihood we go back to the low and make a new low is very high. That's on the software. And you go to a monthly that has a hook and a cross. We got the PAI hook, trend momentum cross. What is a hook and a cross strategy, you ask? The only strategy you ever need, along with a fantastic market trade management system. It can enter automatically for you. It manages the trade automatically, and you just sit back and let it do its thing. But when you get a PAI hook and a trend momentum cross on a monthly, the weekly is going to cycle. When you get a PAI hook and a trend momentum cross on a weekly, the daily cycles. A daily hook and cross, the 4-hour cycle. 4-hour hook and cross, the 1-hour cycles. Get it? So that's why it's important. Why is it important with options? Because we know when a monthly hooks and cross, it takes about 2 to 5 months for the weekly to cycle. Or if a daily is going to cycle, it takes about 2 to 5 weeks. And a 4-hour takes about 2 to 5 days. So I can use that in options to know, well, I expect this to go down. How long should it take? And give me an estimate of that and add a little buffer zone for options so you don't get time decay. But for options traders, this hook and cross strategy is phenomenal. And then this is expected to go lower low as the monthly hooked and crossed. But what happened, Emil? The weekly did not finish. What is a weekly cycle? Red, blue, and green go toward oversold. Trend momentum goes toward oversold. We're not there. So this is why I said the other week when we got that bounce right to the resistance zone, we were likely going to see this thing turn over and finish the cycle down in the coming weeks. So is this a guarantee? Well, no, but we're in a position of authority. We already banked the profits. Look at those pips. 312,755 pips. That's just on this Nikkei, but you get the point. So that is not bad. The likelihood this finishes the cycle is higher than this is going to turn up and go breaking out. I like the odds. So this is why we decided after the bounce, we sold that and got into this trade, right? And we're sitting in a position of authority. Any questions on that? So in closing, is this likely to play out? Yeah, it is. What is this like? We got to go breaking the high to warrant breaking out. I don't see that happening. I see even the NASDAQ being pulled down. But caution is the word, because again, we have earnings and tomorrow's CPI, core PCE, and GDP, released tomorrow, then NVIDIA earnings. And if it's not rock stars, just blow your doors off, this thing's going to sell off. And based on where we stopped in this move with the lower high, look better with the lower low. So how do we know these targets? You use what we call a Fibonacci extension. You go from the high to the low to the lower high, and we would need, if this is an A, B, C move, then we should at least go toward 56,500. If it's A times 1.272 equals C, then we'll start pushing toward that 54, maybe even that 52, 53 range. Well, what if global liquidity gets sucked out over $10,000 worth? No way NASDAQ is going to go breaking out. No way ES is going to go breaking out. They're going to go down along with the Nikkei. In the Nikkei, when we were talking about this the last several weeks, we said we have a problem because ES and NASDAQ are divergent. There's divergence there. Well, you can see it. ES went on to break out. NASDAQ did not. We've been talking about this for weeks now, and it's still divergent. So what is the best way to fix this divergence between the tech and S&P 500? Lower low. That would set back and get things back to equivalent. And typically before we go breaking out and ripping higher, those two get in alignment. And right now they're not. You throw in the global liquidity. Why do I even use the Nikkei? It's an easy version of global liquidity. Is it perfect? No. But you throw it on a chart and there it is. It's my proxy for global liquidity. And one thing is 100% sure. 98% correlation between global liquidity and the S&P 500. So when global liquidity goes tanking, S&P 500 does not go ripping. 98% correlation. It's going to go lower too. Amen? What if we get this, Mr. Tucson? We get that 10,000 plus decline. Not only will it pull ES down, NASDAQ, etc., but it's likely even going to pull maybe our Bitcoin back down and maybe even gold back down. So be awfully careful with this push lower. And the software with the weekly engaging and starting to disengage suggests we're going lower low. What would lower low be? Use your extensions where the target would be. If I'm wrong, when we go breaking out above that swing point high, then we're likely going to go higher high. What would those targets be? Use your 2-point tool. We have the high, we have the low, we tested the 618 zone. We failed so far, but if we start getting above that, then we can start targeting 75, maybe 77. Gets real feisty to the upside, 80. What if that happens, William Bruce? What if this thing goes ripping up there? Then ES is going to go breaking out, NASDAQ is going to go breaking out, and some of the other higher deals might go breaking out. Got it? But if this goes breaking down, in my humble opinion, no way ES is going breaking out right now. No way NASDAQ is going breaking out. And this looks more like we need a lower low to fix this. So that's why I'm saying any rally should be sold on the markets and be aggressively taking profits. All right. So back to this. And a reason of the monthly turning over, the weekly engaging, and about this, not officially disengaged. Red still hadn't hooked yet, but blue's starting to hook, green's starting to hook, red's changing angle. We get this to disengage, the likelihood we go lower low toward that target. Why is that target there? Because that's the extension. Right below the lower low starts my extensions and my targets. Fair enough? All righty. So let's close on the markets. Be careful with ES. Could it go breaking out? Yes. We expect it would come back and retest the prior breakout zone. We don't hold it. Oh, we just got something that took some profits. Hey, on the London breakout. This is an automatic service where you set it and forget it, like Ron Popeil. You click, you set it. What this does, it gives you a high and low of the first candle in London. I like to use some of these pound-based currencies, euro pound, pound dollar, whatever. And I use these. These are very volatile. I like volatility. And this set up in advance, I set it like 7 o'clock at night, anytime like that, and it'll automatically enter the trade at 2 o'clock in the morning, my time, which is London breakout time. It gives the high and the low of that candle. And then when it gets the high, if it breaks it, it'll go long, or it breaks the low, it'll go short. So you can bracket it per se. So when I go into my expert advisor, properties, it gives you the option to put in how many lots you want to trade, your stop loss, take profit zone. But in here, it gives me the option, do I want to breakout trigger long? Do I want to breakout trigger short? Only me, when I know based on, my monthly, weekly, what direction the market's likely to go, and even though it might want to break lower, maybe I don't want to go short, right? Maybe I don't want to take it short. So I have the option to say, okay, if I say true, then it gives the high and the low. It pops in a pending order to go long. If you break the high, it pops in a pending order to go short. If it breaks the low, and then it's OCO. So it'll pop that in. You break the low, it enters the trade for you. Then it'll cancel the long trade. That's what this one was. I said true on both. But what if the markets are changed and we're expecting, like here, the breakout? I didn't take the breakout short on these last week, right? I said I'm not going to take the short when it breaks the low. I want to take it when it breaks the high because we expected this cycle. Everybody good? So you see these prior lines of the highs and lows. And up here, we did the exact opposite. We were extremely overbought on multiple time frames, and we said, all we want to do on this one is break the low. We got 150, 50 pips, then 100 pips, then 150. That's 300 pips, right? Do the math. One lot 50, another lot 100. That's 150. The third lot 150 more. That's 300. And this thing is like science. Well, the good news is, what if it breaks the wrong way? I set the limit to what my stop loss is going to be. Do I want it to be whatever I can afford, right? These are volatile pairs. You need to have a little wiggle room for these to move, but this allows you to set it up where I can bracket it, where it'll get high if it breaks the high or go short on the low. If you think the market's in a trend and all it's doing is pulling back and you don't want to get caught on the short side, you want it like over here, you don't want to get caught on the short side when we were dipping into the zone, then you only take the long. And you do all that in advance. Awesome. And this one we did both because it was kind of in between. Not only the 1 hour was getting overbought, but the 4 hours kind of oversold, and that could have easily gone higher, right? Man, what if we didn't slingshot over here? We wouldn't be sitting in a position of authority right now. This thing could have just kept going straight. So that's why I put both. When I look at a 4 hour going up, a 1 hour going down, then it warrants taking both directions. If this 4 hour was over in this direction, at the same time the 1 hour was in that direction, then I wouldn't have taken anything breakout long. I'd have just told the trade management system, only take the short. And how do you do that? You simply go into your trade management system, and under trigger short, trigger long, you just click on it and you change it to true or false. Got it? So you're in control. What does this candle hour start? That's 2 o'clock my time. That's equivalent to the first hour of London trading session. And that's why I chose, we call it London breakout, if you will, but it's the breakout system. So if you're in a different time zone, just figure out from your time zone to when London starts, you put that time in here. So whatever your time is in relation to London, you test it in a demo account first to make sure that it corresponds. And it'll pop in a high, it pops in a low. And if you have both of these true, if it breaks the low, it goes short, enters the trade. When it hits the take profit, it moves the stop loss into profit. See it? It moves it into profit automatically for you, and then it lets it continue to wait. What happens if it reverses and goes up? It'll pip you out for more profit. What happens if it continues in the down direction? It'll hit you take profit 2 and then take profit 3, etc. All right? All right. Sorry about digressing into that, but that's just part of the tools in the toolbox. So in closing on ES, we get below 76, which we're a little bit above it. We're going to go to 75. We go below 75, we're likely going to 72, 71. I'm leaning more to the downside than the upside. When do I take the upside seriously? Not just a little bounce like earlier today, and we're kind of weaning off of that right now. Zoom way in. Overnight, we kind of had a little bit of a rally, and we kind of just, I'm not really expecting a massive move in either direction with the volatility coming. NVIDIA earnings close of tomorrow's trading session, and then the release in the morning. So this thing will probably just kind of grind in this zone, ideally start grinding lower. But hey, compress and compact the channels. The software is pushing lower. We're in a position of authority on this trade. So I'm going to let it run because we start closing below 76. The likelihood we go to 75 and test this zone is good. We don't hold that, the likelihood we go extension hunting, 72, 71 zone is very high. So, Emil, what happens if we close below this pink box? We're going lower low. And that trade that's running will continue to run, and those other take profits are down here where we're expecting it to go. Okay? All righty. And then, of course, NASDAQ is even less bullish because we got the scenario with the lower high. And yes, NVIDIA could blow doors and this thing could go breaking out. You know what the targets are. If we go breaking out, then we're going to target 31.5, 32. If not, we go lower low, we're going to start targeting this 26, 25, maybe down here as low as 20, 22. We shall see. But it is what it is, right, Mr. Tucson? We're at a lower high. We need a lower low. What are the lower lows? Starting around that 26.5, 26.6 level. If we start pushing it, 26,000, maybe 25.5. And if we use a 3.2, that high, this low, that lower high, now we're talking this thing pushing down toward that 3-day magic fibbo. Any questions? So any rallies in the short term should be sold. Be careful, because like I just told you, NVIDIA, big NVIDIA, one time the world's largest company out there, had a little bit of a pullback, but NVIDIA, the technical picture could be that we get a breakdown. Earnings, Wednesday after the close, some estimated 92 billion, payout of a little over $2. That's some big numbers to meet. And look at NVIDIA, kind of like the same thing. NVIDIA went up, corrected, lower high. We could get a lower low out of this thing. All we got to do is get less than just stellar results. This thing could easily sell off. So I'm not guaranteeing it's definitely going down. Down goes Frazier. Down goes Frazier. Can't say I'm guaranteeing it, no. But this price action, a lot of chopping and overlapping after this initial run up, which kind of looks 3-wave corrective in its own right. Then all this chopping and overlapping, not the biggest bullish looking market I've ever seen for a breakout. And we could definitely come back and revisit the magic fibbo. So my first target to the downside is about this 201, 10 bucks or so. We start breaking below that. Then we have targets. Use a 3.2. We got a high. We have a low. Let's see which one was lower. I'll say that low 189.80. This low over here 190. So this one over here is the winner. So you just click your control key, hold it down, it locks it in at the lower low, and then you go up to the recent higher low. So we're talking 180, 170 zone down here. Yep. I think I messed that up. Let me do that again. Doesn't look right. Well, let me take that out and I'll do one more of those. So we do the 3.2, come up from the high, that there, you come to the low, that there, and you go up to the lower high. Yeah, that's about right. 180, 174, 168. We don't hold this zone, Mr. Tucson. Let's say this happens. And we don't hold this zone. Guess where we're going? We don't hold, and I'll make this green for now, because it should act as at least temporary support. So far, so good. So if we don't hold this, where we're going? We're going to go back to the prior high, right around this 150 area. That's kind of where NVIDIA climbed up to, had a nice retracement before blasting off. And since that prior breakout, ladies and gentlemen, we really haven't visited that 150 area, right? Kind of went up, pulled back, broke out, and we really hasn't retested. Other than that 1 week here, we kind of closed out next week, tested it, and then went up, but we haven't tested that. I was looking for this thing to come test that here, but we didn't get it, and we went breaking out again. Now we're at lower highs. This is on a weekly chart. So all we got to do is get less than stellar results with this price action, suggesting we need to go lower low where? So we're around that 160 area, 170, 180 right there. Let me zoom that back out to the daily so you can see those numbers. 180 first, then the 170-ish level. And if this support zone doesn't hold, the likelihood we go visiting that prior breakout around that 150 is very high. So that'd be my 1272, 1618 extension around 152. We don't hold this, we're likely going to test that prior breakout. Everybody good? Look where that prior breakout is, right at that level. Can't make this stuff up. What if we go breaking to the upside? Well, then you do the inverse of that. What if the stellar earnings are so stellar as stratospheric? Then until we get above this 227 level, I wouldn't take any kind of rally seriously. But we close above that, then you use the same tools. I have a high, we have a low, and we start getting above that zone here. Then we start targeting 240, 247, maybe get spicy toward 260. So if NVIDIA blows doors, we could see price start moving up this direction. If they don't, and it's not stellar, we could see price move toward this direction. And tomorrow, we can look at the bid and the ask price and figure out what the market makers are pricing in, what type of move up or what type of move down. But I would not be surprised between that with the move up somewhere in this zone, with the move down somewhere in this zone. So we'll see what that turns out tomorrow. Amen? So typically it's pretty volatile, $20, $30 range or so. So if we go breaking out 30 bucks, we'll roughly be in this zone. We go breaking down 30 bucks, we'll be roughly in this zone. So it kind of fits. Amen? I'm not trying to tell you, oh, short NVIDIA, definitely, because the earnings are going to, they're so lofty goals. And again, even if they just meet expectations, it might disappoint the markets. Uh-oh, NVIDIA is not growing leaps and bounds like it has been. Uh-oh, and this thing could sell off. And the technical price action picture suggests lower low, more than higher high, but hey, it is what it is. Got it? All righty. So last time, 6%, 3%. Those are some big numbers it had to achieve, and it did it. So what happened during that achievement? See it? We did earnings here. We got a better than expectation, beat expectation. We got initial pop into that out of the release, and then it sold off. So could we see something like that again? We beat expectations, nothing real stellar, but kind of like we did last time, a little percent over, a little percent here, get a little bit of a rally, and then we fizzle and sell off. Or we don't even do that this go around, and look at the earnings over here. Big expectations, 3-5%. What happened? Sold off after. So this is what I'm leaning toward. You can see why. This one was a little bit different. We're still kind of the same. 3%, 3%. And what happened after release? Sold off, started to bottom and then grind, but still chopped. It went lower low. So we're going back multiple earnings. And even though they beat expectation, price initially had a little maybe after hour pop, but going in the next few days, it sold off. Coming over here, sold off. Coming over here, kind of pop a little bit, but sold off. And then this one, look out. The momentum is to the downside. This price action is to the downside. So if we do get a nice pop on earnings, doesn't mean we're definitely going shooting to the moon or probably fizzle and then sell off like the last multiple earnings. Why am I spending so much time? Because if NASDAQ sells off, if it sells off in Q1, exclamation, go back to my chart, and the NASDAQ with NVIDIA selling off, they both look like we need lower lows. So it's kind of lining up. Amen? And throw in the deciding vote, global liquidity looks like it's got to go lower low. So when you start adding all of those 1 + 1 + 1, kind of giving the same three conclusion, we're going down. So that's why I said for weeks now, any rally should be sold, and we really likely need to go lower low. Is it impossible to go higher? No. We clear the resistance zone, then we'll look for the higher highs. But in the short term, this thing will look a lot better going lower low. And like I said, it's global liquidity is my proxy here. If we go lower low and we drop 10 grand or so from 60s down into 50s, no way NASDAQ is going breaking out. No way S&P is going breaking out. I don't see the Dow going breaking out either. I see if this evaporates 10 grand or so, these are going to come down as well. Amen. The only one that has a little bit more bullishness is this IWM. I really wanted to go a little bit higher for the Russell to hit 31,000, 3,100, excuse me, 31,000, 3,100, and we just missed it by a little bit. Well, we're still kind of holding from the low to the high. We're holding above support. This could go breaking out. And is it possible this thing could just pop up here real quick and then get the bigger one, or we get the bigger one now? We're still at the same type of scenario, all this chopping. It's holding. We get below that green box. Where are we going? Magic Fibbo. Got it? We hold above and we break the 618 to the upside, high to low. We break the 618, basically this little swing point action over here. We get above that, then we're going to 31. And we're stuck in between. But again, if the Nikkei sells off, everybody sells off, this is more than likely going to sell off too. So any questions on that? Let's circle the wagons. Remember, could this go breaking out? Yes. Is it more likely to go lower low? Yes. We still haven't officially tested too much of the prior breakout. All I can say is we close below 76, then we're likely going to 75. We close below 75, we're likely going lower low toward that 72 and change, 72, 71 and change, basically the magic fibbo. Got it? All righty. There you have it. And NASDAQ the same way. This is way less bullish. We did not go breaking out. We're at a lower high. So that suggests we need lower low. Lower low target somewhere around that 26.5, maybe down to 25.5 zone. Somewhere in the zone. We don't hold this green box. Then we go lower low on the weekly magic fibbo. So is it a matter of do we get to the daily 3-day or do we get to the weekly? We shall see. How's it start? It starts by closing below this green box up here, basically below the daily magic fibbo. So we may have this thing just kind of churns down here. We close below. The likelihood we're going to go down there is very high and test this support zone. That doesn't hold. We're going to the next one, which is the weekly. We get to the weekly in maybe late fall, or maybe it pushes it out even to late year. Then I'm looking for the Santa Claus rally / maybe even next year push. We get down here in October, November, or whatever, salivate country like we did this past April, looking for that bounce. Amen? So this looks like the bigger A, B, C. And if that doesn't hold, then we need a lower low, which would be ideal to then set up that weekly magic fibbo combo bounce, stratospheric type of move I showed you. Come off the month, well, actually the weekly. And if we can get this magic fibbo type of bounce from the low to the high, that 618 zone, we get that combo meal. Then the potential is to go stratospheric toward upper 30,000 to 40,000. This bubble is not a guarantee. It's if we can get down here and bounce, this is a good target for it. That's my stratospheric type of bounce. Otherwise, Harold, even with a smaller decline, the breakout's still going to go higher high, no question. This is not the end, in my humble opinion. Are we definitely going to get up here? Well, we get a bigger pullback and we bounce. This looks more and more likely. But I'm here to guide you each day. Let's continue. What about black gold Texas tea? Kind of warned you about the rally. Be careful. That would probably roll over. And we got a 618 retracement out of that. We're rolling over. So now it's about the magic fibbo. Emil, we start closing below this magic fibbo, kind of setting the tone. We're going lower low. So this needs to be adjusted. There's a new high over here. Use your control key so it acts like a magnet. And we start getting below this magic fibbo, kind of sets the tone. We're going lower low. What's another way to look at this? The prior low to the high, this is part of that 618 zone we bounced out of, and we rallied to the 618, 786. You can see why I use these, because they're like magnets. So now we have a new low, right? We have a new low, and we have this new high. Look, no, it's a 3.2. Sorry, I want my 2-point tool on this one. We have this low. We have that high, and look where the 618. Can't make this stuff up, ladies and gentlemen. That's why we start getting below this magic fibbo. That zone right there suggests we're going where? 72, 70. And what did I say earlier when we compress and compact the channel? We close above 94. This is the onward and upwards toward 125, 130, 150. We close below 72, sets the tone. We're going lower low. Got it? So in the midst of the compress and compact the channels, we expected the bounce. We expected this turnover because of what? The software was setting that up. Come over here to Black Gold Texas Tea, the Beverly Hillbillies. And we can see the 4-hour cycle down, the daily's hooking and crossing. My weekly is overbought, it's kind of grinding, oversold and engaged, disengaged. So this is still danger zone. And the monthly is turning over. So we're kind of mixed signals between a monthly down, a weekly kind of up, a daily down, a 4-hour down. So this is why these technical pictures come into play. But this could easily just continue in the months to come, continue to cycle, and we go not only back to the lows, but we go lower low. We're not going anywhere near this COVID shutdown stuff over here, but we could likely get a correction to get a lower low, and we start getting into lower low realm. I'm looking for a bounce. So drill, baby, drill has to be in the 60s to make money. And if we go dipping down into the low 60s, 50s, maybe, and dip into the 40s, it's not going to stay down there for extended periods. It's going to bounce. So compress and compact the channels, Mr. Tucson. I did say when this rally came up and we bounced, if we were to break that high that still stands, if this thing bounces and we break that high, likelihood we're going toward that 130 to 150 target is very high. We break down below 72, which is that swing point, then the likelihood we're going lower low is very high. Where will we go test? At 55, this prior low over here. So even this 3.2, high, low, lower, high. My equivalent's down here about 68, 63, 59 area. So this is the support zone that if we go breaking below 72, this is my first target zone. We don't hold that, then we're going to go test the low. We break the low, then that brings in this low 50s to maybe 40s. So do we go here or do we go there? Kind of scenario of all of ours. A dollar index can go breaking out. Is the dollar index going to go breaking down? Is black gold going to go breaking out? Is black gold going to go breaking down? In this technical picture with the software kind of in between, that's why I'm looking more for the technical side. Close below 72, I go short. Close above 94, I go long. In between, I take aggressive profits. But we did expect on these lower time frames, that was the 4-hour cycle up, the 4 hours pushing lower, all a matter of how do we hold this support zone. We got the bigger support zone below. We got the smaller support zone, which is this 618-786 zone right up in here. So if we don't hold that and we break this low, that's why I said 72 area, we get below that, it's over. We're going down. Any questions? So Emil, close above 94, 125, 130, 150. That's a big bubble up there. And we close below 72, basically even below that swing point, but I just throw in 72. That's kind of the bottom of that 618-786 zone. We do that, we're going lower low. Got it? So take aggressive profits while you're in it. I expected this pullback from here. Now, do we hold support to go breaking out? Do we break support to go lower low? And that's why I want you to keep your eyes peeled on 72 and 94. We go above 94, definitely think about going long. We close below 72, definitely think about going short. In between, we can just pop and grind in here. What happens if we get a deal? Likely going lower low faster. What happens if we don't? Likely going to go breaking out. So either way is set. The monthly could continue. The monthly could push lower and do this, or the monthly could slingshot up and do that, let the weekly cycle. So this is why it's about support and resistance. We break resistance, we're going higher. We break support, we're going lower. Got it? All righty. What about gold? There's gold in them there heels. Be careful with gold. Gold and Bitcoin are kind of reaching a zone. This initially chopping and overlapping was not real bullish. This definitely looks more three-wave-ish. A, B, 1, 2, 3, 4, 5, C. A, B, C, downtrend, likely could still go lower low. So what's the make or break level? I've been talking about it for days. I don't know why it's not on this chart, but the initial move up, if this were to start to retrace, remember we talked about this initial move up, retracement. We said if we were to break this zone to the downside as we rallied, then the likelihood we go in lower is very high. Well, this does at this juncture look a little bit 1, 2, 3, 4, 5. Right? Everybody good? So if that is the case, then the key level to watch is going to be from your swing point low up to the high, this zone. And notice that prior level I drew in here is the same zone we're looking at. This 42/41 area, that support zone right there, Mr. Tucson. We get below that, we're going low. So this, say 4,200, 41 and change. We get below 4,100, the zone, say 42 to 41. We retrace in a three-wave correction. We hold that, we break a new high, and then this pretty much sets the tone. Gold's probably bottomed. But this is danger zone that we reject. We don't hold the support zone. We go low. So watch that 42, 4,100. Get a three-wave correction, go breaking out, sets the tone for higher high. We get a bigger correction and we don't hold that support zone, then we're likely going low. So I'm not convinced that this is the end. I did say that when we got the low over here, you might want to consider getting into some gold action because this could be the low. But I'm not convinced just yet, even though this nice run up, it's in a resistance zone. It's where you would expect this thing to find resistance. And from the bigger picture, what did gold do since this correction? It's been making these lower highs. And you say, well, Gary, this actually went, that trend line doesn't hold here because this one didn't go far enough. But it's still the same point. We're still got a series of lower highs, and lower highs. And that might need one more flush lower low to set it up. All I can say is this was a good time to nibble, be in a position of authority on that move. If the correction goes deeper than we need, then lower low is coming. All I could say is I would add more to my position down here. Where's gold going? 7 to 10,000. My humble opinion, 1,000% confident on a 100% scale. That's where we're going. Any questions? But can we still go lower low? All I can say is we go lower low, back it up. No buy, sell, to hold recommendations. I cannot tell you what to do, but I have some bids down here to get more and more involved in a gold rush if we get that pullback. Otherwise, we're in it to win it for this thing to go. And if we get a bigger correction, then we'll look to buy and add to our position. Silver, again, is still very suspect. We finally got above the magic Fibbo. We've been testing it, but this still looks very suspect, even though, because all of this price action was not real bullish to start. So it's all about, is that my 1, 2, 3, 4, 5? Where's the three-wave correction? Do we hold that 66 zone? If not, then we're likely going lower low. Again, this was certainly a buy zone. And if we go lower low, it's back to truck up zone. Where's the silver going? 150 to 200. And last but not least, as I was stating, be careful with Mr. Bitcoin. It rallied into a very dangerous level. This is certainly an area we could falter and go ripping lower. What if we get that Nikkei global liquidity to go plummeting 10 grand or so? The likelihood it's going to pull Bitcoin down would be great. So let's see how that plays out. I'd be awfully careful if you're Bitcoining it now to be in a position of authority, because a few things going against it right now. Typically, when you go out to a weekly, do I not have it on that chart? Oh, I cleaned that chart up. Let me see. Did I clean them all up? Yeah, I did that. Well, anyway, I have my Bitcoin halving every 4 years, 2012, 2016, 2020, 24. The next one will be in 2028. We know the rhythm. You get from the all-time highs to the winter lows. It's like 12 months later. So this topped out in November 21. We bottomed below 20,000 in November of 22. I begged and pleaded and told our members, everybody that would listen, sent smoke signals. When Bank Floyd Freeman, blood in the streets, Bitcoin's a scam. I'm like, nope, this is the time you really need to. Bitcoin below 20,000 is a steal of a deal. And the target was to go to 150, went to 126 and change. So next target, we should close and bottom somewhere around that 50 to 30,000. Still looking for that. Was this 57 the low? Maybe. I'm not convinced this bounce is the one that's the breakout, but needless to say, was the nibble zone. I'm looking to add. I got add at 50. I'm going to add a bunch more at 40. If it dips its toe in the 30s, I'm loading it up. And when do we sell? And why do I think this is likely still not the low? Because we're not 12 months later. From that high to that low, 12 months. That high to that low, 12 months. You go way over here, that high to that low, 12 months. So every halving, Bitcoin goes on a run 12 to 18 months. It tops out, then it basically pulls back about a year, then it rips. Pulls back after 12 to 18 months post-halving, it dips. A year later, it starts to build. And right now, we topped out in October. We're not in October yet. So this thing could certainly go lower low. All I know is I have bids down here to buy Bitcoin, buy some ETFs, leverage. I got it all the above. Looking to add to the position down in here. We hit 50, I'm buying a bunch more. We hit 40, I'm buying more. We hit 30 or dips the toe in the 30. That's back to truck up zone. And what's the target? Up here above 200,000. Any questions on that? Any questions? So be careful with the rally. I expected this. We talked about this thing rallying up near this 78 to 80 range, exactly where we went to. So be careful, my friends. Could it go higher? Sure. But with the Nikkei potentially dropping 10 grand, I don't see this thing continuing to rip in that environment. I see this getting pulled down. And this chopping and overlapping, even with this initial pop, still looks three-wave. So what's going to be a key? Well, Mr. Tucson, if that's the 1 and that's the 2 and that's the 3, then we get back below that 69 area, lower low. And the timing is still in our favor. Every other time when it topped out, it was 12 months later it bottomed, and we're not in October yet. We're not over there yet. So that's another reason we could still get a sell-off. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.